Hello, everyone. Good morning from Winter School, and it's a great pleasure to start our second day. And so yesterday we discussed the decentralized governance and came to a conclusion that we need coordination in the industry to unite the architecture first of the decentralized governance solutions to achieve greater progress together. And so I think this will be also true for the topic we're going to discuss today. So speaking about the system resilience, we could not avoid the elephant in the room, obviously climate risks and sustainability. And so I'm really inspired to with the panel of the distinguished speakers we have today in science and climate tech. So without further ado, let me introduce you the moderator, Irina Fedorenko, who will lead this session. So Irina is an academic and a serial green tech entrepreneur working on the nature-based solution. She's based in Oxford, UK. She's a chief carbon officer at Vlinder, co-founder, and she completed her PhD in geography and environment, University of Oxford, where she also co-founded a biocarbon engineering startup and led mangrove planting project by drones in Myanmar, actually where our passes has crossed. So Irina, up to you. So yes, Irina has been joined now. And,
So Sergey, I also gave the link to some colleagues and so on. Do they need to be accepted or they can log in automatically?
They most likely will be in the participants, so they will see this session. And we also have actually a web broadcasting on YouTube from the website of the Perm School. And so this is where they can join as well. And also to ask questions, you can just use the chat. So this to all the participants and both in the Zoom room and in the YouTube. So
Hi,
I think
everyone.
yes, Irina, great to have you here.
I managed to join. Hi, everyone. It's amazing to have you. It's really a great honor for me to share this platform. And I will not delay you too much because I know we have just a started session today. So everyone is looking forward to hear from you. I'll just say that in the global scheme of things, of course, climate risks and sustainability risks have become more and more important. And what we've seen with the COVID pandemic this year is really just a small rehearsal of what is to come in terms of global change, impact on enterprise, impact on the world, and on everyday life. So with that, it's really important to look at climate risks, but actually it's also even more important to look at climate solutions. Because when we talk about all the different complex problems that the world is facing right now, it can obviously become quite tiring, but the fact is that there are so many wonderful people, organizations, and institutions that are working on solutions that decided to dedicate their careers to mitigating climate change, to changing the tide, and to mitigating those risks for ourselves and obviously for the future. So today we will hear from brilliant speakers. We'll start with Didier Sornette. Didier Sornette, Professor Sornette, he's a professor on the chair of entrepreneurial risks at the Swiss Federal Institute of Technology, Zurich. He's been a professor there since March 2006. And he's also a professor of the Swiss Finance Institute and a professor associated with both Department of Physics and the Department of Earth Science at ETH Zurich. And he will start our session with his presentation on energy, and we will move gradually towards from very much kind of engineering solutions such as new energy sources to nature-based solutions in this session. So thank you so much for joining us, and I'm pass the floor to Professor Didier Sornette.
Okay, so can I share my screen, or you upload
you should
my
be able
slide?
to share your screen.
Yeah, so I see that who can share only all panelists, okay. But I don't see, so I am on my sharing screen. Ah, voila, here it comes. Great. Okay,
Yep.
so you must,
That's great.
right? Good. That's good. Very good. Good morning, everyone. So it's my pleasure to present to you this talk on strategic energy analysis for the future. Essentially, the guideline is to put back physics, thermodynamics, grid engineering, demographic and economics to the discussion of what are the solutions, what are the diagnostic first, and what are the solutions to, as Irina said, to address the big challenges. And while I am also optimistic like her about many people clever working on this solution, I am a bit less optimistic with the cacophony and the wishful thinking, the aspirational drives, which forget to put physics, thermodynamic, grid engineering, demography, and economics, so mean the hard sciences, to see what is possible. So the talk is really here anchored on putting the laws of physics and the laws of the universe back to the debate rather than being controlled by aspiration and daydreaming, let's say. And this work is a collaborative work, and you see the collaborators with the pictures, in particular, Dr. Huyen Mintz is the co-author of the study that I will be mostly focused on. But the other person, like Professor Volkan Kroger, Spencer Whitley, and Haile Ayoud have been working, and also Peter Cowell have been working a lot with me on a unique database of all, of 1,200 incident and accident of the nuclear industry to actually price, for example, these energy sources in a rational, quantitative way. So without further introduction, let me set the landscape by reminding us about the big picture. Essentially, for me, if you look a step back and look at what is mankind, mankind, you can define it in many ways, right? Development of knowledge, conquest of the environment, of the world, and so on. But everything is powered by energy. Without energy, we are nothing. So you could say that the evolution of mankind has been from the energy from human muscles and muscles of others, with slavery and with the big work like the pyramid and so on, to animal energy, like the horses, which is equivalent to about 20 men, to, of course, the mechanical horses, like the tractor and so on. And actually, you see the whole evolution of mankind is going from, let's say, human energy, let's say biological energy, to, let's say, mastering the fire, and then steam, and then coal, or well oil, for lightning, and then more condensed form of energy like oil, and even more condensed form of energy like nuclear. A gram, so you have a factor of 3 million in energy concentration between a gram of, let's say, nuclear matter and the second most dense form of energy, which is liquid hydrogen, and then comes oil and so on. So the whole evolution of mankind has been about mastering more and more concentrated energy in order to go through the series of industrial revolution. So, and I advertised this book that we released in 2018 with my two co-authors, entitled New Ways and Needs for Exploiting Nuclear Energy, because in many countries, in particular in the West, not so much in Russia, of course, but in the West, there's been this drive, especially in Europe, in Switzerland, Germany, to push the society out of nuclear energy. And our conclusion, after extremely deep study, very detailed study, is that it may not be optimal, and there is a misconception that I might explain a little better later on. So essentially this is illustrated from the evolution of, for example, of sea travel, from the wind and manpower to wind power to coal-fired power steam to oil-fired steam and to nuclear, each time getting extraordinary improvement of autonomy, efficiency, and so on. So when we look at 10,000 years of human history and even the 200 years of the four economic revolution, the upper graph here, upper right graph, illustrates that the evolution has been essentially by adding energy sources. We have been thirsty with energy, and what the bottom graph shows is that there is a very strong correlation between the amount of energy we consume and GDP per capita, and the decoupling with the level between the level of quality of life and energy start at let's say moderate level of GDP, but it's clear there is an extremely strong correlation at low level of GDP per capita. So you need energy to protect yourself, to feed yourself, etc., etc. And only when you get to a relatively let's say evolve let's say a rich society, that energy start to be less important, and you see progressive decoupling of the energy input and so on. So there's been also a misconception in economic spheres, in economic modeling, where the models assume that energy is a consequence of economic development. The empirical evidence is enormous in showing the reverse, is that when you find a new energy source, when you have available cheap energy, then there's a boom in economic development. And of course, Russia is a good example of that, but there are many other examples in many places of the world. So I would say the challenge that we are facing, if we want to shift out of fossil energy, and this is a challenge that we have never faced in the past, which is not adding new energy sources. You see the different colors correspond to essentially serving the demand for the growth of energy that people have in the world. Here we are speaking of replacing energy sources, given the fact that, for example, a recent study in Germany showed that they need to double the electricity consumption due to the transportation, which is electrified, and so on and so forth. So the challenges are enormous, because until now, the thirst for energy has been filled by adding energy sources. And I remind you that the extraordinary success of China, that in 2 or 3 decades was able to go from a GDP per capita maybe of $200 or $300 per year to a $10,000 or $12,000 per year per capita, was obtained by a tripling of the consumption of energy right in the country. And India is on its heels. Africa needs also to double, triple, quadruple its energy consumption. So in the West, often there's this misconception that we are good guys, we're trying to go to the green technology and so on, but we don't realize that what we do is just minor gesticulation, and the big actors in the world that completely control pollution, CO2 emissions, energy consumption are China, India, Africa, and so on. China, for example, pollutes and emits more than US and Europe altogether. So these are the real fact that we need to actually realize. So there are a number of studies by BP, the International Energy Agency, and so on, about what is expected. And you see some graph about the different electricity generation that are constituting the portfolio that are envisioned in the future, the different scenarios of the development of GDP and so on, the relative energy needs and so on. So there is a vision and projection of enormous increase of electricity in order to make so-called cleaner energy. But of course, electricity is not as clean as I'm going to explain a bit later. So there is a lot of unknown uncertainty in dealing with these problems. Now, in terms of global climate change and the CO2 emission, there's a lot of aspirations and wishful thinking, but when you look at the data, I remember a study that we did with my PhDs in 2013, and we were looking at what was the state of the CO2 emission. And what we found is that not only the rate of CO2, so the velocity, if you lower the slope of CO2 was not decreasing, but we were still about 5 years ago in an acceleration phase, right? So it's like we are a car, you are driving a car, you know, the car has to turn around, go back to the level of emission of 1990, right? To have this goal of no warming more than 1.5 or 2 Celsius by 2050 or 2060. But actually the car is still accelerating forward. That's the harsh reality. So the level of challenge that we have in front of us are enormous. Huh? The car is not decelerating, is still accelerating. So I want to make that very clear, to realize that there is an enormous gap between the wishful thinking, the declarations, and the facts, right? And here you see on the right, the growth of CO2 emission, which is still accelerating, and the modulation of the emissions. The only thing that have made a difference are essentially human crises, which led to GDP growth slowing down, which of course, like the latest COVID, COVID is often hailed as a great occurrence for CO2 emission, but this is not a solution, because it just means that you emit less CO2 simply by stopping the economy and locking people down, doing nothing. So when you look at the evolution, you know, the exajoules that are exploited or used by mankind, you see the past, the vertical line here in white, and then the projection or the wishful thinking and the scenarios. You see that notwithstanding the discussions in the 1980s, 90s, 2000, and so on, we are still on a growing path, and the effort in order to go down are enormous. So we have to realize the level. Now, I would like just to make also a mention, and this is a huge debate, and that requires much more time. But for example, there is also a lot of misinformation in interpreting climate and weather data. For example, when you look in about 120 years ago about the state of glacier in Europe, you see this beautiful glacier going very low, and more recently you see the glacier receding, and it is hailed as a sign of catastrophe, and indeed that something is really, really bad. I remind you that, and actually some top experts in Switzerland have rebuilt the whole history of glaciers retreats and advance in the Alps in the last, as I said, 10,000 years. And there have been 12 periods here indicated in red, where the glaciers receded completely and disappeared completely of the Alps, with the valleys colonized by trees. And you see the most recent period is such that if such an occurrence doesn't appear, this might mean that we are going again to a cold mini ice age, which might not be so good. So I'm not a rush to say that I'm not a denier that, of course, human has an impact, but you should not attribute any hiccup of the planet and the evolution to the climate change or the human impact. Also, with the Texas, disaster and so on, I remind you that in 1895, 20 inches of snow was over all Texas, Tampico, Mexico, and Florida, and so on. So this happens, and we tend to have a very short memory and to misattribute things. So I call for rationality and much more balanced view than just crying wolf all the time. And it's not to say that, of course, the situation is not preoccupying, of course, but we have also to be rational. And before I show you my specific study, I want to finally to mention the extraordinary cost of replacing and substituting an energy system with another. The green energy that is called so-called green energy, wind and solar, requires billions of tons of steels, hundreds of millions of tons of aluminiums, and tens of millions of copper and so on, and many other rare metal, which have come at a huge cost at the environment, which are hidden from our view in Europe, because they occur maybe in Siberia or in China or far in South America and so on. And these photos here illustrate, the paradox of this reliable green energy. So only focusing on so-called green energy is, in my view, a big mistake. We need to have, like in finance, and diversification over many resources, because otherwise we go to a catastrophe which will be much larger than the one we might want to alleviate. So having said that, then we ask ourselves, given the fact that the present policy have been failing and there's a lot of discussion to do something else, what should we do? And we were attracted by the methodology developed for over 5 years, about a decade and a half ago by the European Union, the so-called NEEDS project, which was very, very strongly funded, almost 12 million euro, in order to develop essentially the roadmap of and to advise what should be the policy respect to energy in Europe. Right? So, and it is a very big program. But we were a bit surprised that they just focused, in the end, they analyzed 36 different energy sources, and they put solar photovoltaic at the top technology for Europe, and in particular for England or Germany. And it was a bit surprising to us, and we were a bit skeptical. So we went into analyzing what they have done, and we developed our own, what we call hierarchical, multiple choice decision analysis, thinking the view of a panel of experts working in industry and academia and so on, who are on every day taking decisions on all different types of energy sources. And the characteristic of our study has been to use this hierarchical view, very different from the NEEDS EU program, which was asking 26 questions, very horizontal, not structure. And we propose actually to characterize energy sources through 5 categories, which we think are fundamental in order to have a balanced view of the validity of energy sources in order to build a portfolio. It's like, in finance, you want to characterize the different return dimensions and the different risk dimensions here. So health, which can be decomposed, environment, grid, because of course we tend to forget that we need a stable voltage and a stable frequency, and economics, and also resources. There is no sense of having a great energy source if it cannot be scalable to serve, a big part of humanity. And of course, an extremely important concept is the energy return on energy invested, which also differentiate the sources. So this is a description of the quality of the different experts that we question. And then the point is that according to this grid of information, to this hierarchy of question, we ask them to grade on a scale of 1 to 10 these different dimensions of the energies, 1 being the best and 10 being the worst. And the result are the following. So you see the different dimension in terms of fatality, so health, environment, grid, economics, and resources, which are each of them broken in sub-categories. And for example, here it's to just compare nuclear and hydro, which are the 2 winning energies, according to our experts, where, for example, nuclear is very good in terms of energy return on energy investment, close to 1, while maybe less good on cost of energy, subsidies paid, and on environment cost. While, for example, hydro might be not so good on resource availability. You cannot have dams and lakes everywhere, but might be very good in terms of illnesses and so on. Might be not so good in fatalities. You can have big catastrophes and so on. And some of the worst source that our expert actually graded was wind and solar. Wind, of course, is very good, and solar very good in terms of illnesses. Some environment costs do exist. We have to, but in terms of footprint, for example, wind, it can be huge. Benefit to grid is very bad, and so on and so forth. And the gas, full cycle gas turbine was one of the 3, together with nuclear and hydro at the top of the list. And we analyzed with this spider diagram the energy sources, and you see the closest to the origin, the better the source. So it's quite interesting. These are the 6 bottom technologies in terms of the rankings: solar, wind, wave, all different types of solar, thermal, solar photovoltaic, biomass, and tidal lagoon. So this is a global view of the best technologies here: nuclear, as I said, gas, full cycle hydro, and the worst here at on the right. So now, just let me ponder on this and use some quotation. Some of you might know Sir David Mackay, who was one of the world leading energy analysis, and I really recommend, if you don't know him to read his book, which is something like Green Energy Without the Hot Air, which he's a physicist, so he calculates everything in details to show what is feasible. And just read his quote. He said, "The only solar got on the table in the UK was democracy. The people, the representative of their parliament wanted to have solar, and the experts said, no, we should not do it. But he says it's extraordinary that solar is such a wonderful thing, even though Britain is one of the darkest countries in the world. So it doesn't make sense from a thermodynamic, physical, and economic point of view." And here you see the quote of Warren Buffett, who says something similar: "I will do anything that is basically covered by the law to reduce Berkshire tax rate. For example, on wind energy, we get a tax credit, and if we build a lot of wind farms, that's the only reason to build them. They don't make sense without that tax credit." And in my analysis, I can see that there is a lot of arbitrage, if I take my financial and investment hat, coming from the love to the grid energy, which is not well thought, but is highly subsidized and supported even more and more in response to the huge policy and central banks and fiscal policy of trillions of dollars that are put in the economies to subsidize the transition. So as an investor, of course, we should invest in green technology, not so much as Warren Buffett says or Mackay says because they make sense, but because we can make a lot of money from the subsidies and the tax cuts. So I see that time goes fast, so I will just say that with respect to our result, we were concerned with the reliability of our results. So we asked them to weight the importance of the different criteria to rank the energy sources, and we played with different types of weighting, letting them rate with different types of weight, linear, logarithmic, exponential, and so on. And we looked at also the range of ranking that emerged through changing the weight, changing the metric, and so on. And to our great surprise, in a sense, but also joy, we found that the ranking of the energy essentially did not change. So you see, we looked at the rank order difference across different weighting scheme, different ways of attributing ranks. And we found that there is essentially at most one unit or rank change, so that the best energies are remaining the same and very stable, and the worst remain about the same. We also spent time to validate our result in 3 ways, looking at what could be expected in terms of pairwise correlation between the scores when a correlation is expected, for example, between cost and energy return on energy invested, or when we could have real data, for example, comparing the cost with the levelized cost of energy that has been measured, and also comparing our scores with those from the cost-benefit analysis of this big needs European project. And in a nutshell, we found excellent validation, very strong correlation when it was expected, excellent correlation between the cost of energy, which is measured, and our ranking by our participants, and also with, yes, again, the cost with the levelized cost of energy, excellent ranking, and also very good correlation with the needs European Union cost-benefit analysis, with just one outlier, gas, which can be explained by the fact, I think, that at the time when the study was done, oil and gas prices were very high, and as a consequence, the participants of the needs European Union study did not see that gas had a strong future, and they were expecting, as everybody does, with a nose on one's windshield, that gas would die quickly because there was a deficit of sources. Now we know better, 15 years later or 10 years later, that there is enormous amount of gas on the planet that still can go on for a very long time. So this is, I would say, an outlier simply due to short-term view and biased view of the expert at the time. Now, I'm almost finished. I just want to say that the very big surprise we had was to compare their results based on cost-benefit analysis and our results with their so-called MCDA, multiple choice decision analysis result, which shows essentially zero correlation, so that they ranked the sources totally opposite, with nuclear at the bottom and solar photovoltaic at the top, with wind also. And even within their two studies, the correlation is negative. And actually, the boss of the study, Stefan Hirschberg, who I know very well, I contacted, he is working in Switzerland in the Paul Scherrer Institute, told us that actually what was the reason for the difference was the social acceptance. And for me, it's a fundamental mistake, because social acceptance should not be input variable, it should be an output variable. Social acceptance should be a result of informed decision maker, informed people, informed citizen, and not a priori bias based on brainwashing or misinformation. So I would finish by mentioning that the NEEDS MCDA analysis has many mistakes and many problems, in particular the complexity that led an initial set of almost 3,000 experts to decline actually to answer, and only about 200 to 300 people, only academics, wishful dreamers, no expert from the industry essentially contributed. And the way the process was done was in such a way that the result was manipulated, because the answers could be analyzed in real time with respect to the consequent ranking of energy, which led to a lack of independence and a correct analysis. So I will finish by saying that in the end, our results show that nuclear, hydro, and gas seems to be very important energy sources that should be part of the portfolio. I'm not saying that, of course, we should not develop wind and solar. We should, however, look at the full life cycle, including the cost, the lives, the pollution associated with mining, the recycling, for example, of solar panels that are not calculated. We don't know yet the technology to recycle these very dirty metals and so on. We don't know how to recycle the big wings of the windmills and so on and so forth. So my final slide is about calling for really not just wishful thinking, a lot of blah, blah, but letting a very strong investment of hundreds of billions of dollars, of euros, or Swiss franc on trying to break the bottleneck of energy. For example, new storage system, new, better, for example, generation 3, generation 4 nuclear energy sources, like Russia is a leader in this field. And this is, I think, what is missing, a lack of technological solution, and putting forward solutions which are aspired for, but are not supported by thermodynamics, physics, economics, demographics, and grid engineering. So thank you for your attention, and I'll be happy to contribute to the debate later on.
Thank you so much, Didier. That is truly a groundbreaking study, actually. Thank you. I'm personally very grateful to you for sharing, because I didn't see that when it came out. And obviously, it's very different to what one would expect to see when thinking about sustainable energy studies. I did my PhD here in Oxford, and I cannot imagine learning that gas and nuclear would be on the top of the chain, because we do just spend a lot of time talking about wind and solar as the future for Britain as well. So that's very, very interesting. I will just ask you one burning question. How was the reception of your work when it came out? Because obviously you presented to scientific community, the policymakers. What was the reaction from people?
So, I mean, you have, as you can imagine, three types of reaction. The experts who are confronted to the daily realities and who like it a lot. And there is actually a quite significant group of people who are doing the calculations, like McKay and so on, who are really supportive, and we had a lot of support, support. You have the politician and so on, where it's an uphill battle, uphill battle, because, for example, if you speak of nuclear energy, there is the red component, So, if you look at the facts, and I mentioned that we had in the last 5 years aggregated the largest database of 1,200 incident and accident in nuclear energy to really characterize the cost in terms of fatalities, in terms of real dollar costs, and so on. And the conclusion, rationally, even accounting for extraordinary events that could occur, like Fukushima multiplied, like what I call Dragon Kings, still puts nuclear energy at the least fatal, the least dangerous, and the less costly. But in the mind of people, of course, it is exactly the opposite due to this kind of fear coming from a long past. So it's an uphill battle with respect to the policymakers. And of course, there is also the large crowd of people who just ignore our study. So I'm happy to present it and to have challenges and so on. I'm not saying that we are right. I just bring, you see, to the table a kind of, as I said, for me, it's very important to put, my keywords are let's put back physics, thermodynamics, economics, demographics, and grid engineer, because this is forgotten. And when you look at most of the discussion and the proposal, there is no sound quantification of the consequences. And for me, what I'm afraid, I will finish that actually by trying to do good, and me too, I would wish to have a clean solar panel on my roof and it solve everything, but it's a very diluted energy sources. By trying to do good, we do much worse, and we destroy the environment and we pollute much more. And for the common person, have a clean, shining solar panel on the roof looks like great and fantastic, but actually what the person forgets is the minds and the people actually polluting somewhere in China or somewhere in South Africa, and also the recycling after 20 years and so on. And the consequence also of having to double the grid network in order to stabilize, what are all the costs? You need to have the full portfolio calculation. So, in a finance conference, this is a concept that is easy to understand, right? Because we need to have the full dimension of all components of risk. And this is what is missing.
Yeah, indeed. Well, thank you so much. And indeed, should not forget physics. It has dire consequences. Right. Thank you so much, Didier. And we will come back with more questions after all the other speakers. So I'm now moving to the next speaker, Stuart King from Babel Cover. Stuart founded Babel Cover with a passion and determination to democratize insurance, returning the industry to its past principle through the lens of technological innovation. Stuart is an internationally recognized risk finance professional. He is an individual with a highly inquisitive and curious mind, and is always willing to share the change and exchange his experiences for the betterment of those around him. So thank you so much for coming, Stuart, and thank you so much in advance for sharing your experiences.
Yes.
Our audience. Yes, we can see it. That's
perfect. Great. No, it's a pleasure to be here. Obviously digitally this year, and not in Perm in person. So I missed my friends and the off-conference debates. Didier's presentations were insightful as well, as always. So today the theme of my topic is the interconnectedness between insurance market and natural catastrophes. I'm founder and CEO of Babel Cover. We're an early stage fintech disruptor. And what we're really focused on is trying to bring more transparency and the use of, finance assets from insurance into a more sustainable world. My background, I'm a chartered accountant, having worked at notable firms in the structured risk finance field and the capital planning field. But I don't believe the current insurance financial system, if you call it, is fit for purpose for the future. And through these slides, I will hopefully give you some insight into the construct of the global insurance marketplace. So if we start off, everybody buys insurance pretty much in some shape or form. It's a huge component of the overall global economy. It represents about 10% of GDP, and that's around $10 trillion per year in premium collected. But there's a tremendous amount of assets that supports that premium volume, and that's over $30 trillion. And that's a huge amount of money that may not necessarily be put to the best use from an environmental standpoint. My presentation will cover three broad topics: a very quick overview of how the insurance market is constructed, the interconnectedness between purchase and insurance and natural catastrophe events that, whilst we may not directly be impacted by the big events, we're indirectly impacted through the increases in our car and pet and travel home insurances. What I'd then like to show you is an insight into a project that was completed many years ago around helping a multinational understand what its carbon risk emission was, because they didn't know. So we start off with a very easy to read slide, but what we're essentially saying is there are broadly 4 levels in any transaction of insurance when you buy a insurance policy from anywhere from a business insurance to a personal insurance. But what we have then behind that is many different participants that try to diversify that particular risk. So we start off, if you like, from the day one of buying the policy, but it moves all the way up into this kind of macro level, what we call insurance-linked capital. And these are sort of highly sophisticated, securitized capital market bonds. I've been fortunate enough to work on every layer of this industry. And I feel confident that when we start breaking down the costs, we can actually build a much leaner product for the buyers. If we look on the left side of the slide, you can see that each participant, and there are many, many thousands of insurance companies around the world, each of them has their own cost base, and each of them is really not so digital. There's a big movement to digitalization from the COVID impact. If we look on the right side of the slide, we've got an enormous amount of costs then in intermediary fees and broker fees. This is where we really begin to find that the application of blockchain technologies is revolutionary for this particular industry segment. If we move on then from this macro level capital, it really has to move through all of those different layers to get to you and me as customers. And at that very top layer, this slide outlines to you what we call the traditional capital and alternative capital. And really, this is a fund that's set aside to cover these 1 in 1,000, 1 in 10,000 year events, these really huge, expensive events that happen over the world. And essentially what happens is the money goes back into society to repair any damage that's caused by man-made or natural disasters. As you can see, the alternative capital is a way that you can, and it's increasing now after COVID as an example, because the insurance industry is paying out more claims than they had projected, fresh money comes in to, if you like, support that capital base. And what that means is in an environment where you've got, tremendously low, likely to continue low interest rates, these insurance-linked products can capture a higher coupon return for investors. Obviously, a higher risk return is important to understand. This slide, again, the sources from this information, Swiss Re. I used to work for them, so there's many other statistical providers in the insurance industry and the reinsurance industry. But if we look at this slide for a minute, what it's saying, on the right side, there are 202 natural catastrophe events globally and 115 man-made. And what you see here is there's a huge increase in natural catastrophes. And this is posing a very big problem for the global capital markets. The frequency is increased and the level of loss is also increased. This is a total economic loss and not the insurable loss. And there's a tremendous gap between cost of events and the insurance that people buy. So our industry is trying to fill that gap over time, particularly in the developing nations. In this slide, what I'd like to outline to you all is over time, there's predefined events that have a cost to insurance, cost to the global markets. And what we tag there is the World Trade Center events. That was a man-made disaster. And in that year, 2001, that had a big impact on the pricing models and the catastrophe pricing models of the macro insurance industry. We had a flood of alternative capital to support the next year. What that meant was you and I as consumers were paying more, our premiums would go up across that lower layer. What we have then, another shout out, is the New Zealand earthquake. As you can see, whether the earthquake tsunami doesn't happen very frequently over that time horizon, but it has a tremendous financial impact for insurers. These are $1 billion. On the left side, you see 50, 100, 150 billion. More recently, if we look at number 9, there was a number of hurricanes, Irma and Maria and Harvey. And again, this is extremely expensive for that top layer capital in our industry. So as you see over that slide, the natural weather-related catastrophes, and we often have connected storms, floods, hurricanes, hailstorms. These are all getting more and more frequent. Now, is that a sign of, as Didier was saying, human consumption of energy and not? We don't know. Is it just a natural cycle? We don't know. But what we do know is that's causing a tremendous amount of financial loss at the people that are really not the biggest emitters of carbon, but actually they suffer the worst effects of climate change. Displacement of countries. I mean, we're talking about massive societal challenges here. So to bring it more to a specific use case, the Paris COP21 conference, everybody signed up, and we think that's probably 6 years ago now, so not really much has happened. And I'm hoping that that's going to continue accelerating. But what we worked with a multinational client was to answer these questions. How does a multinational identify and manage an increase in consolidated carbon emissions because of unforeseen events? And this is important because everybody's trying to get to carbon neutrality, but we still have events that will happen in the future which could increase the carbon outputs from an event that may be uncontrollable. So what we're trying to do is financially dampen down the repatriation of carbon emissions. We asked, what is the most effective way to combine risk and sustainability departments to better protect the organization? What we know is multinationals in the past, corporate social responsibility wasn't so quantifiable, but that's accelerated over the last few years, where risk management departments and CFOs are beginning to see the cost of climate change. But we're also beginning to see a demand from investors and also a demand from customers for more transparent and climate-friendly products. We asked what are the available options and most financially effective methods to treat carbon risk. And then we wondered, how actually do we create a product to enable a multinational to internally finance the risk that they are happy with, but then transfer the risk that they're not happy with to the external markets. It's a hugely exciting and growing field, brand new asset classes that are emerging in this carbon risk financing field. What's supporting that is, I guess many will be familiar with the Task Force on Climate-Related Financial Disclosures, and there's an awful lot of public disclosures that allows analysts to if you like, analyze the financial part of a company. But when we start looking at sustainability reporting, it's really still at an early stage. So these efforts to bring more of a consistency for particularly listed public entities around climate risk disclosures enables the analysts to get a better feel on benchmarking, but also driving actions, driving actions to force management into better climate risk reduction measures. So these were the 4 topics that we looked at with multinational. Their problem was inability to meet the commitments made to reduce carbon neutrality. Will be carbon neutral by 2020 was quite popular. I guess if we look now, that may not be the case in 2021. Fragmentation and communication, there's a big disconnect between departments of big multinationals that needs to be bridged. There's a lack of a structured process it's an emerging risk, climate change and carbon emissions. So how do you begin to build a structured risk management process to identify the risk, to quantify the risk, and then to understand whether or not to accept or mitigate the risk? And there's a huge challenge, a disclosure challenge of standardization to overcome. And putting a number to such an intangible risk is very, very difficult. These are the headline findings from the case study we performed many years ago. And what we found was when we narrowed down to the manufacturing sites, they were on a lot of earthquake zones or hurricane paths or in areas that would be subjected to flood. So we analyzed the catastrophe modeling to understand what is actually the potential carbon emission risk if those manufacturing plants were to be affected by an event beyond the control of the corporation. What we found is that many corporations are going carbon neutral through renewable energy purchase. And I think we also have to consider Didier's comments around the end-to-end climate carbon impact to those solutions. But in this instance, we identified that there was 175,000 tons of carbon at risk across their manufacturing plants. And we quantified that through a number of different techniques to a number of 35 million euros, which sounds a lot, but for a multi-billion euro company, it's probably not big enough to get some huge investment. So what we also then tried to predict is what would we charge as an internal carbon price? And that's quite popular with particularly some of the big tech firms where they're charging their subsidiaries internal, you could say premium to encourage management to make greener decisions. I'm extremely pleased because there is no solution right now on the marketplace that can take, once the quantification of the risk has happened, into an access to offset those carbon credits. You've got two different types of market: regulated and then this voluntary carbon marketplace. And in the voluntary carbon marketplace, although it's very well defined and very well accredited through many different bodies, the access to that product is still very restricted to small, medium-sized businesses or consumers. So I'm very happy to work with the Vlinder team, a chief risk officer for that, because there's a lot of complexity, not just in the regulation, but in actually the pricing of voluntary carbon. And one of those projects, as Ira would be probably telling everybody about, is mangrove investing, which is a super solution for not only sequestrating carbon, but also actually repairing the oceans. And there's a huge circular part to that value proposition. I would encourage everybody to follow that project. It's emerging. I'm very pleased to be part of that. As I said, there is no genuinely efficient mechanism right now to the technical solution to offset that. So there's no doubt the use of blockchain technologies in the insurance system is happening. People are behind in the industry. Digitization, we're behind. But not only that, the huge change that's going on in the financial system, we know it's not fit for purpose, and that's changing rapidly. And I think we have a great opportunity to be part of that dialogue. So I guess digitized, democratized, decentralized. We bring ourselves back to what you may call the founders of insurance, which is through the Enlightenment period and the challenges they had there. I think we're moving to a period where before it was separation of church and state or maths and religion. And we're really moving into a period where, a separation between state and institutions. And I think that's going to be the big challenge that the crypto markets will have to address. And I'm not sure where that's going to lead, but maybe next year we'll have further updates. Anyway, so for me, Babel Cover, we're looking to decentralize insurance, offer customers a technology that allows them to connect to this macro capital instantaneously and have a system which is much more transparent. So thank you for listening to me, and please reach out, follow the project. And yeah, as I say, I am disappointed not to be in Perm, but things will go back to normal, I'm sure, soon.
Thank you. Thank you so much, Stuart. As using my power of a chair, I'll ask a personal question for you as a risk manager. What are your predictions onto when things will go back to normal?
Yeah, not soon, actually. I think, but personally, vaccinations have been accelerated. I think it's good, but they're not completely effective. But it's saving a lot of people's lives. I think we've lost too many lives unnecessarily for potentially political challenges, political positioning. I think we don't have to look too far into the statistics to realize something is not right, when as a society we should be protecting the vulnerable and the sick and the elderly. So I think, yeah, not anytime soon, I don't think, but we will get back. I mean, human society is resilient. That's what makes us unique. So yeah.
All right. Well, thank you. That is reassuring, at least.
No problem.
Yeah. And to everyone, yes, we are being streamed on YouTube now, and also people attending here. So please do submit your questions. I'm getting questions here in the chat, and also questions on the YouTube in the chat. So send the questions and I will ask them to the panelists in the end of their presentations. So again, thank you very much, Stuart. And we are moving on to Harry. Harry Grocott, my pleasure to introduce him. Thank you for joining us from Britain. Harry started his career in the finance sector in the London city, and that was where he learned about urgent challenges of climate change and became so passionate that he decided to make a career switch and did a master's in the Imperial College of London. And during his time, he started an innovative startup, Treeconomy, that is tackling the problem of forest sequestration qualification and quantification. So he will tell us more about it and generally talk about nature-based solutions that we made a nice transition from energy to risks to mangroves. So Harry will talk to us about other land-based ecosystems and the importance of emerging carbon markets. Off to you, Harry.
Thank you very much, Irina. I will just very quickly share my screen and get this up and going.
Yep, that's great.
Perfect, great. Well, yeah, thank you, Irina, for having me, and I'll make sure I stick to time. So yes, as Irina says, I'm the co-founder and CEO at Treeconomy. Essentially, we are a climate impact startup business, very much focused on nature-based carbon dioxide removal. Our view is that there is an enormous societal need for carbon removal, both from a sort of climate maintenance perspective, and that this will, on an ongoing basis, become as big a business as oil and gas and the emerging renewable energy market longer term. Obviously, in the interim, we're very much focused on carbon offsetting. But we see a carbon removal future as a business segment. So essentially what I'm going to do is give a very quick run through on the voluntary carbon market, so the VCM as I put it here, essentially provide a bit of background and overview, and then zero in specifically on nature-based, and then essentially go through a little bit on what we're actually doing within this sphere in Treeconomy and why we're so interested in it. So I'll move on. So I'll apologize first off. I have stolen this graph from McKinsey. So if anyone here is from McKinsey, then this is very much your graph, not my graph. Don't sue me. So why are we interested in carbon removal? Essentially, it all revolves around this concept of net zero. So the Paris Agreement in 2015 essentially set the target for limiting warming to below 2 degrees C, ideally 1.5 degrees C. The thesis for this is that that's an acceptable level of warming and damage, although there will be significant damage from this, and that it's an achievable target and will limit overall damage. On this, we've already sort of used up 1 degree of that 2 degree warming limit, so we're already halfway there. And under the current sort of carbon budget, we have about 8 to 9 years left until we breach that 1.5 degree C level. So there really is a need for change here. So essentially, that's where this net zero 2050 piece comes from, and you'll see that sort of governments are setting these targets, as well as companies now as well, and it's all revolving around that 2 degree C limit target piece. And essentially, what you can see here as well in the graph is that is also on the assumption that it will be a linear reduction in emissions between now and 2050, and that it wouldn't be a continuing increase and then a sudden drop off. You can see the graph on the right hand side here from McKinsey demonstrates that net zero part of this, which is it's not necessarily an absolute reduction in emissions, but also involves some form of negative emissions. So if you have one out and one in, the idea being that you're then from an accounting perspective back at zero. And that's sort of then where offsetting and carbon removal fits into that net zero piece overall. So what we've got is a target. We've also got then the expectation that at some point, either in the interim or at that end target point, we do have an overshoot. And essentially that we can use carbon removal as a tool to either extend runway or to manage that net zero target. So like I said, you've got governments that meet at these the sort of COP26 later this year, but then below that you've also increasingly got companies that are now setting these targets as the change agents. Initiatives such as the Science-Based Targets Initiative, which is a sort of well-regarded net zero provider or supporter for businesses, saw the numbers double last year. So they increased from 500 companies to 1,000 companies. So not all of them are on the net zero pathway, but it's showing the interest and also the action that's being done. So we've got a clear target. We've got some form of action that could be done, and you can see basically where carbon removal and carbon offsetting fits into this. So what exactly is the voluntary carbon market? First off, you've got, as mentioned by the previous speaker, Stuart, there is a distinction here between the compliance market, which is sort of the EU ETS, or in the US, you've got the California cap and trade as an example there. So that's a compliance market. What you also have is the voluntary carbon market. Now this is where basically offsetting comes in, and that anything that's offsetting or any company that's setting a net zero target is playing within the voluntary carbon market. Now, it's also worth noting that there is no singular voluntary carbon market. It's a bit of a misnomer in that extent. It's essentially split between different standards. So you've got, I've listed 4 of the main standards here: Vera, Gold Standard, American Carbon Registry, and Climate Action Reserve. There are then other standards as well, slightly smaller. Plan Vivo is one example. And the UK has its own domestic carbon standard, the Woodland Carbon Code, and that's where Treeconomy is based for now. Essentially, you've got all of this action spread across these different registries. It's very disaggregated. So there are increasingly, some reports I've listed. Ecosystem Marketplace here is generally a good provider for some data and insights. And also you've got sort of professional service firms, again, McKinsey, as just one example. There are plenty others out there who are starting to sort of sell their services and monitor these things. In terms of the size of this voluntary carbon market, beginning at the top, the current market today is between 350 million US dollars, the voluntary carbon market. Though this value is only based on those 4 large registries I mentioned, and for example, excludes the Woodland Carbon Code and sometimes Plan Vivo as well. What I've put in here is also a relatively confusing acronym SOUP for the UK market, essentially demonstrating that there's a level of complexity. You've got 2 different unit types which are traded. You've got something called pending issuance units and something called woodland carbon units. These are both essentially the same thing, but are traded on a different basis. There's 1 million pending issuance units and only 8,000 woodland carbon units. And they tend to achieve different prices, which then makes the sort of market valuation for this relatively difficult to gauge. Because all of the trading is done on over-the-counter trades as well. But you could say, for example, that the UK market is between 12 and 25 million pounds. So if you were to convert that into dollars, you can see that's a significant part of the $300 to $350 million voluntary market, but is not currently included. In terms of the total retirement action, so this is actually purchases and carbon offsets that are used by companies. Last year, this was about 95 million tons. So basically 95 million credits were retired last year through various voluntary carbon market mechanisms. I've put a map in the bottom, which again, essentially is designed to show all of the nature-based projects that are happening worldwide. Again, this is just showing that it's a slightly disaggregated space in that I've then taken all of the UK projects from the Woodland Carbon Code, where there are quite a few, and those obviously aren't really showing up on the map shown below. So it's just another example that it really is quite disaggregated. Then you break down, and let's assume we're looking at a single registry. You then also have different project types that fall into this voluntary market space. So I've listed a number here: renewables, energy switch, and then you move into the more nature-based space, which is avoided deforestation and afforestation or reforestation. As a rough percentage of the market, forestry, that's both afforestation and avoided deforestation, are about 50% of the market by value, but much less by volume. And again, then at the bottom, I've put in a graphic. This essentially shows the growth over time. I mean, just look at forestry and land use, for example, between 2017 and 2019 has almost tripled in value. So a massive growth, largely driven by a volume increase, but also a slight increase in pricing. And essentially, you can see that there is an overall growth in all segments, but there are certain segments that are becoming more and more sort of valued both by buyers and by developers. So I'm taking some data now as well from a project I was working on earlier this year with Trove Research, where essentially we were looking at beginning to aggregate these market sources. So we were doing a bottom-up analysis of various voluntary carbon market standards. So essentially, you can see the different project types we've taken. What we've done is essentially split them up into 2 different buckets: projects that actively remove CO2. So that could be CCS in terms of enhanced oil recovery or something like that, afforestation, and various sort of RED plus projects, as well as those that reduce emissions. So that's being renewable energy, methane capture, or energy efficiency. What we did through this was we did have a focus very much on nature-based solutions. So we did a backwards looking test on all transactions across the voluntary carbon market from 2003 onwards to today, and then looked at forecasting into the future and made the assumption, okay, what if we did all of this with nature-based solutions? and then what is the land area required for that. So you can see here, we've broken that down into the offset demand. So in 2020, demand was about 80 megatons. That's 80 million offset credits. And we've converted that into land area and then the country relevant to that. And you can see essentially there's a massive increase in demand over time. There are error bars around this. Obviously, it's a future-looking forecast, so this is by no means spot on or accurate, but it does give a rough idea as to the actual size of space that's needed. This is a slightly blunt force approach. It assumes that there's no land sharing, for example. You either would have farmland or forestry land in this example, and we can pick back up on that notion in a little bit as well. This is some of the graphical output that we did, essentially showing the cumulative issued and retired. So that's essentially supply and demand, left and right. So on the left, one of the really interesting pieces here, the two top caps on this are nature-based solutions in the light green and red plus, which is essentially avoided deforestation in the darker green. And you can see the massive growth in those two segments in terms of issuance. And also on the right-hand side, you can see the corresponding growth in the retirements. So what that's showing is that there really is a market demand for nature-based credits and offsetting methods. And this was essentially what we looked at as well, which was the residual. So how much surplus credits are there in the system? And I mean, there were two key things. One is that there is a significant surplus. So the voluntary market has been plagued by oversupply and probably pushing down prices on that basis. But also you can see that there was if you quickly look at on the left-hand side here, there's enormous issuance in that light green and absolutely none in terms of surplus. So what that's showing you as well is that the demand side of the voluntary carbon market is hoovering up these nature-based solutions. So there's a really, really big demand spike again. So just have a quick look on the left there, and then absolutely no surplus in there at all. It was a really, really interesting finding. And again, just shows that at the moment, this sort of data is hidden across 4, 5, 6 different registries and 7, 8, 9 different types of offset credits. So it's highly disaggregated. So where is this market going? There's a number of initiatives out there. The main one is this thing called the Task Force for Scaling the Voluntary Carbon Market, TSVCM, which is where the quote on the right has come from. Mark Carney, the previous Bank of England governor, is leading it, as well as a bunch of other organizations. It's very private sector led, essentially pushing for the market to become massive. I mean, like we said before, this is a currently $350 million market. The target is for $100 billion market by 2050, which is enormous as a growth rate. I think there's an interim target for 2030 to be a $50 billion market. So just enormous increases in volume and pricing. In terms of other forces as well, there's another slide on the TSVCM I'll get to in a moment. COP26 this year has Article 6 as a key discussion point, which will be really interesting. A lot of that is focusing around this corresponding adjustment. Essentially, how do governments track international voluntary carbon market trades? If the UK buys its credits, for example, or UK companies are buying its credits from, I don't know, Ghana, how is that going to be accounted for? Because essentially then what you've got Ghana, which is giving away its carbon removal. So there'll be a really interesting dynamic on that, and that'll certainly be one to watch. There's an increase towards project differentiation and price discovery. I'll skip over that for now because I've got a little bit on that and what we're doing at Treeconomy later. And then the last thing to mention as well is internal market movements, so something called CORSIA, which is essentially the carbon offsetting and removal scheme for international aviation. So if you have a country, let's say the UK, it's got its own international airspace. When airlines are flying in between international airspace, the CORSIA idea is that those flights are still being offset through an industry body. There may well be something that occurs in a similar vein in the International Maritime Organization for shipping and freight too, though that's not yet happened. So onto the task force piece. So essentially what this is looking to do is scale in finance into this sector. So the main thrust of the TSVCM is around the core carbon principles, their CCPs, and then additional attributes. The idea being that you can condense, at the moment you've got millions of over-the-contract trades that are happening. And essentially what they're looking to do is condense that into a few standardized contracts which will be used globally, which then will give you a market read-off, which would be similar to oil markets or other commodities. The way then to achieve a premium price point within this would be to have high quality projects that deliver those additional attributes. So if we were to say, you've got an afforestation site, that would get a carbon price based on the core carbon principles. But if that site then is supporting biodiversity or is preventing floods for some reason, then that's an additional attribute and would allow for that project to achieve a premium price point, which is great, because then you'll have a huge amount of finance coming into this space and a way to differentiate at the project level. So what do we do? What do I do? What are we looking to do? Essentially, we are a developer broker with the Woodland Carbon Code in the UK and Vera internationally. So we're looking to set up projects and then source and sell these projects. We're taking a tech-first approach. So rather than using current methods to quantify carbon, which are basically inaccurate, they use tape measures and Excel spreadsheets, we're looking to use a remote sensing approach from satellite and drone methods, which means we can convert from the physical into the digital space. So we're a nature-based removal business. I can skip through that piece. Like I said, essentially what we're looking to do is create this kind of digital quantification as seen on the right-hand side there. Some of the techniques that we're looking at the moment are sort of using high-resolution satellite data to extract 3D point clouds, as well as drone data, either LiDAR or structure from motion. What this means is that we can get an exact quantification of above ground biomass. We're testing this at the moment with conventional forestry sites. Once we can do this with conventional forestry sites, what we're then looking at doing is taking this and using that technology to enable high quality carbon offset project sites that not only fit in with that new structuring that's coming in with core carbon principles and additional attributes, but also means that we're looking at land sharing principles. So especially here, if we're looking at agroforestry or regenerative agriculture, that slide at the beginning where I was showing the sort of total land area that's needed, and you need a country the size of Nigeria, 100% forest coverage is really, you're going to struggle to find that much space just for forestry. So let's begin to see how we could build that sort of a land use into conventional agriculture to support biodiversity and soil depletion. So those sorts of projects which don't fit into the voluntary carbon market today because they're structurally complex. So you can't measure rewilding, you can't measure agroforestry with a tape measure and an Excel spreadsheet. It simply doesn't work. So the tools that we're looking to develop will enable these project sites. Also things like the Miyawaki method, which I've shown on the bottom right, which is a fantastic afforestation piece taken from Japan, essentially allows for microforests. So again, super relevant when you've got competing land use, especially in urban environments. So that's everything from me. I'll stop there. I think I've pretty much used up my time, but very happy to talk through some of this later and also go through on some more detail if needed on the technology we're developing, but also nature-based solutions more broadly.
Amazing. Bravo. Thank you so much for this amazing presentation, Harry. And really good to learn also about the whole market and the potential. I wonder, what do you see in terms of trends, like yourself personally? Do you see it's just going to grow exponentially year on year, or would there be some event or a condition for it to plateau eventually?
Yeah, I mean, I think in the near term, there really is a ramp up from demand. So again, we talked about companies setting net zero targets. So if you're running a company and these companies have got millions of tons of emissions, essentially. Now they can reduce a good amount of that and should be reducing a good amount of that. But essentially every time a company flips the switch and says, we're going to now become a net zero company, that's an enormous amount of demand for offsets that comes online. And like I was saying, those signed up to SBTI last year doubled. So 500 to 1,000. So at least 500 new companies are sort of coming closer to coming online. Those are large companies. You've also got things like B Corp, and a really generally from a bottom-up perspective, a social legitimacy piece for businesses. So I think there will be a lot of demand in the near term, which I think will push volume. I think what you'll then begin to see is a search for different projects. So we're already starting to see some companies saying we want a project that's cool or different or helps us differentiate us as a brand from the one next door. So then you're beginning to see that, which I think will, I don't know if that causes a plateau or not in volume, but you'll begin to see that price discovery piece, which is good projects sort of will come through at a higher premium price compared to other, how that works as a dynamics perspective, I don't know. It'll also be interesting to see just how quickly supply can come online. I mean, if we're looking at nature-based, trees take a long time to grow. So there needs to be a lot of finance going in now to get that done, which is high risk investment. And I think, Vlinder, for example, are doing a lot of good work with that. And I think really is the demand signals are looking good from that point, but it's not clear, basically. It's not clear.
Right. Yeah, well, really, really interesting. Thank you so much. And yes, you're right. We are sort of, Vlinder is on the investment side and the project developer side, and Treeconomy is obviously doing its piece on verification. And now we are coming into Eftimiya, who is on the demand side and helping companies to actually get this high quality carbon that we are talking about. So I'm happy to introduce Eftimiya Salo from Compensate. She's a sustainability specialist in Compensate, and she's responsible for project evaluation and selection. She works closely with the scientific advisory panel. She has a background in sustainability, climate change, and environmental policy and law, and she has both an MSc and an LLM. She majored in environmental law and policy at the University of Eastern Finland. So she works for Compensate that helps to connect customers with and companies with high quality carbon offsets. And we are very excited to hear from her. How is she making those calls and how is she selecting projects? Thank you.
Thank you, Irina. I will just share my screen.
Yep, great.
Great. So thanks for the introduction. I'll just say a few words about Compensate. So we are a non-profit and we were launched in 2019. And our goal is to provide easy access to high quality carbon capture for both companies and individuals to offset their emissions. Our sustainability approach is built on 3 pillars. The first one is collaboration with world-renowned scientists. The second is highly selective portfolio and independent evaluation criteria. And the third one is high overcompensation. We have full transparency on our model, and we upload our bank statements and certificates that we purchase, like on our website. We don't take any cuts from the compensation payments that we receive, and we buy certified carbon credits on the voluntary carbon market. So our portfolio, we have this portfolio approach where, just like investment managers who manage a fund, we want to deliver the best climate impact. So the portfolio is 80% like forest-based projects, which include forest conservation like REDD+, and reforestation, afforestation projects. and 20% is dedicated to innovative solutions, which could include nature-based or also more technical carbon capture methods. At the moment, we have biochar and soil carbon. So both technologies are emerging, and that's why they fall in this innovative section. Each project is evaluated on climate impact, biodiversity, and social issues, and human rights. We have a mix of different projects with different prices, which maximizes climate impact. The share of each project is determined based on the project climate integrity score and its price. This allows for the most competitive projects in terms of the highest climate impact and price to take a bigger share, thus getting best value for one's money. And this is a snapshot of 6 of our projects. In total, we have 12. So we have like both conservation, like Rimbaraya, protecting peatland forest from conversion, like in Indonesia. Then we have 2 reforestation projects, which are community-led in Uganda and Kenya, where local people who are planting trees on their farms, they receive 70% of the carbon credit revenues as a direct cash payments. Then we have, of course, the mangrove restoration and reforestation project in Myanmar, restoring degraded mangroves. We have Brazil nut concessions, which is conservation of Amazon rainforest combined with sustainable harvest of Brazil nuts in Peru. With One Seed is supporting, it's again community-led project in Timor-Leste, supporting farmers reforesting their own lands, who also get a direct cash payments, like on an annual basis for each tree which is planted and maintained. And Harborview Farms is a climate-smart farming, removing carbon from the atmosphere, located in the United States. So here is a little bit about our criteria and evaluation. We have a scientific advisory panel, which assists us in identifying the most cost-effective, reliable, and sustainable means of carbon capture. The panel also monitors research and practical application in the field and advises project evaluations. It consists of 12 world-renowned professors of climate and atmospheric sciences. It convenes regularly with Compensate, and it has an advisory role. It is chaired by Professor Marko Kulmala, who is the most cited geoscience scientist in the world. Together with the panel, like in early 2020, we developed our project evaluation criteria, which goes beyond the international standards. There are thousands of projects certified under gold standard and under verified carbon standard. And we have evaluated like 100 of these projects using our criteria. And we look into the 3 main areas, which is climate integrity, biodiversity and human rights, and community well-being. So through this criteria, we are able to evaluate these projects and go beyond the standards, since like not all credits which are certified are of high quality. This has been a known fact like earlier, and now like the task force was also mentioned, they have addressed also these issues. So the issues in the voluntary carbon market are like well known, and we're just trying to find a way how we can mitigate and how we can ensure high quality. Out of the 100 projects, 10% of these have passed our criteria and they have entered our portfolio. So this just shows that there are significant flaws in the market. Because there are so many uncertainties in carbon capture projects, if we evaluate that some of the risks are not rigorously taken into account or mitigated, then we cannot be confident that 1 carbon credit equals 1 ton of CO2 removed from the atmosphere. That's why we then buy more credits than will technically be necessary to call what we're doing a compensation. And here is why we overcompensate. So we have 3 main reasons. 1 is to mitigate carbon debt. There is like too much CO2 in the atmosphere already, and the safe levels have been surpassed in 1987. Then carbon negative, it ensures like taking CO2 out of the atmosphere, whereas carbon neutral is just one-to-one compensations. So it's it just removes 1 ton and then a company emits 1 ton. So there is like 0, the balance is 0. And the last one is risk mitigation, which are already mentioned. If we see that the baselines or carbon stock changes are over exaggerated and the project is actually taking credit of what it didn't do, we buy more credits to ensure the real climate impact that the company needs. And here are some background principles for high quality carbon credits, which sum quite well our criteria. Additional, emission reductions or removals would not happen in the absence of the project or in the business as usual scenario. Compensating emissions with additional credits ensures that there is a real net reduction thanks to the company's actions. Overestimating a project's climate impact could result from overestimating either the baseline emissions or the carbon stock estimates. The baseline emissions refer to the CO2 emissions that would be released in the absence of the project. And on the other hand, carbon stocks refer to how much carbon is stored in a forest, which is then multiplied by the hectares which would be deforested in the absence of the project. And that's how the project issues that amount of carbon credits which are saved. For example, this is both valid for RED projects and then for reforestation and afforestation projects. And compensating with credits which are not, which are overestimated, will actually increase net emissions, because if a company buys one credit and then to compensate its emissions, these emissions are already in the atmosphere, but the credit doesn't perform. It doesn't sequester 1 ton of CO2 because of these issues and flaws. The third one is permanence. It refers to the longevity of preserving the carbon sinks. So compensation claims are valid as long as the CO2 avoided or removed stays sequestered. Most forest projects have a lifetime of 30 years, and if the forest is logged right after the project ends, all CO2 will be released in the atmosphere. So the permanence is lost while the fossil emissions stay in the atmosphere. Double claiming. So it's the most common form of double counting, where two entities claim the same emission reduction or removal. This would be a company compensating for their emissions and the host country contributing to reaching its nationally determined contributions under the Paris Agreement. Double claiming should be avoided in order to drive climate action and direct financing towards new reductions, rather than reducing emissions which are already being committed to be achieved by the countries. And the last one is net positive social, environmental, and biodiversity impacts. So carbon projects should not result in negative impacts. For example, social impacts could include community conflicts, worsened well-being due to forbidding access to forests or lower income, land tenure issues, forceful evictions, and human rights violations. Negative environmental impacts refer to carbon leakage or displacement of deforestation in the surrounding area, which can be attributed to the project activities. And biodiversity impacts refer to increased, for example, poaching in the area which is outside of the project. And here is why the projects fail our criteria. So from the additionality perspective, selling carbon credits from protecting forests which were never in danger is one cause. This can be, for example, if the project developer is the same entity as the landowner. So in a way, they threaten to deforest their own land unless they're given carbon credits. It can also be forests which are, for example, state-owned and which have no deforestation, like history of deforestation in the region in the past, but hence the project developer claims that, okay, this will be deforested in 30 years. But when you take a look at, for example, satellite maps and images, you can see that there hasn't been any deforestation previously. So it's most likely not additional. The second one is commercial timber plantations. This comes financial additionality to play. So financial additionality means that the project wouldn't exist if it was not for the carbon revenues from selling the carbon credits. So when there is a commercial plantation, which is planted and then cut in cycles, for example, 10 years or 15 years, then the project developer gets money from selling the timber. So in that case, we can argue that this is not financially additional because it's already established business model. So they don't need credits, revenues, because their business is working perfectly even without them. The third one is lack of policy additionality. So this can be seen, for example, if a country has a moratorium on logging concessions or on timber concessions or palm oil concessions, but the project developer claims that the project area would be, for example, converted to palm oil, but despite there is this moratorium which actually protects the area under the national law. So there are such projects with such lack of policy additionality. And the last one is the displacement of deforestation or carbon leakage. This can happen if there is, for example, timber concession in a country, let's say the Democratic Republic of the Congo, and then the project is protected, but then the government just gives another area to another company or to the same company and just displaces the deforestation from the project area to somewhere else. So for the atmosphere, there is still net emissions, even though the project protects one specific area, deforestation happens somewhere else. And this can be attributed to the project. The second one is permanence. This is how long the carbon will stay sequestered. So again, there are four main reasons why projects fail. The first one is unstable political situation. Governments can change their mind, give the land. Now it's a concession, like conservation concession, but then in 30 years, it can become a logging concession. Then regions prone to natural disasters, like rising sea levels can cause like floods in coastal areas. And for example, Bangladesh was like 1/3 was underwater last year. And some projects, for example, located on such coasts are quite vulnerable. The third one is postponing timber harvest for after the project ends. This can be done also by, for example, the land, people who have user rights over the land. This can be like indigenous communities, which just decide to give up their rights for the project duration. But after that, they're free to do with the forest, like to go back to their initial timber plants and harvesting. And the third one is illegal logging, even in protected areas, issuing, for example, like REDD+ projects, issuing credits. There could happen like illegal logging. It could be due to corruption, like it can be even with the knowledge of local authorities. The third one is unreliable baselines. This could be artificially inflating the baseline emissions so that more credits are produced. Example is taking a small, heavily deforested reference area next to a big city or a coast, which usually have very high population density and which drives the demand for natural resources. And using this area to project 100% deforestation of the project area, which could be, for example, isolated in some high mountains with small population density over the next 30 years. So this is not an accurate deforestation projection, which results in the issuance and sale of carbon credits where one credit does not equal 1 ton of CO2 removed from the atmosphere. Then we have community conflicts. It could be human rights violations and evictions of settlers who are living on the project area illegally, like in most developing countries. For example, national parks can be occupied by squatters, which are illegal settlers. They don't have rights over the land if it's state-owned, but if nobody uses it, they can just build their settlements there and start living. So if a project in such national park starts, they would first thing is to remove the settlers which are illegally there, and sometimes it could be like very violent. The project has not delivered the promised benefits, or they're distributed unequally among the local people. For example, only the landowners could get cash benefits, where like many of the people are landless. Or the project promised to build like schools or improve infrastructure, but it has not done it. This can fuel community conflicts. And the last one is ex-ante credits. So we exclude those. However, we come across sometimes. This ex-ante means that the project is selling the credits today for the emissions which would happen like 50 years from now on. So when the trees are planted today and they sell the credits, but actually the CO2 will be removed when the tree is like big, for example, in 50 years. So we cannot call this compensation like for today's emissions. And as it was mentioned earlier, like the task force was scaling the voluntary carbon market. It's a private sector-led initiative led by Mark Carlin, the former governor of the Bank of England. It aims at scaling a transparent, verifiable, and robust voluntary market to help meet the goals of the Paris Agreement. And it expects that the market increase by 15-fold by 2030 in comparison to 2019. The demand is driven by corporate net zero targets. And here are some of the company names who are buyers. You see some of the biggest companies like globally. They're planning to offset their emissions with voluntary carbon credits. So it is crucial that these credits have high quality, because otherwise, if there is like no improvement, they'll just offset their emissions, but then emissions will just keep growing in the atmosphere. There are 6 topics for actions. The first one is core carbon principles and attribute taxonomy to ensure the integrity of the carbon credits. The second one is core carbon reference contracts, which will drive a transparent price signal and price risk management, and it will help supply chain financing. The third one is infrastructure, trade, post-trade financing and data. So suppliers, it will facilitate supplier scale up and also represents the backbone of the trading. And it will contribute to transparent market and reference data. The next one is consensus on legitimacy of offsetting. So it's exactly like if you want to use for achieving net zero, like these credits needs to be claimed to be of high quality. The next one is market integrity assurance. So they will develop processes to ensure market fairness, efficiency, transparency, and reduce risk of fraud. And the last one is demand signal through industry-wide commitments and new point of sale offerings. Based on these topics, like task force wants to increase the transparency in terms of price. At the moment, there is like very low transparency, and the same carbon credit can be sold at very different price levels depending on who the buyer is. However, we found like some problems in the report, which was the first stage of the task force work. And then the next stage comes in June, where the more implementation recommendations will be published. So we're awaiting for this. But the current report, which was published in January this year, so setting of core carbon reference contracts and its price, it's a good thing if the price is set high enough. This will encourage industries to reduce first emissions and decarbonize and then offset the remaining unavoidable. However, a price that is too low will incentivize companies to continue with business as usual and reach for low-cost carbon credits to offset their emissions. Another statement is that low prices lead to worry over quality or create perception that there is lack of confidence in the market. So low-priced credits should not automatically be associated with low quality nor high-priced credits with higher quality. We have seen very high quality credits which are cheaper, for example, than credits which are priced high, but actually they perform like really badly. So increasing prices of low quality credits will not make them better, like overnight. The third one is that statement, all carbon credits should be issued based on realistic and credible baselines. While the report recommends a defensible, conservative, and credible baseline, it does not define what this is. So even at the moment, all these credits issued on the voluntary market, they have a baseline which have been approved. So we really need to see a strict definition of what counts as a reliable baseline in the next stage of the task force. And the next three are: the task force will not exclude projects based on vintage, project start date. We see this problematic since the market is currently saturated with hundreds of low quality forest conservation projects. And if the task force will not exclude existing projects, it must ensure at least that old projects comply with the new rules. In the longer term, flows will have to shift towards removals, including technology-based removals like BECCS and DACs. So BECCS stands for bioenergy, carbon capture and storage, and DACs for direct air capture and storage. We do not support the use of bioenergy for carbon capture. Trees are much more valuable as carbon sinks or as an alternative to fossil-based materials rather than as energy. On the other hand, direct air capture is expensive and difficult to scale, so it's misleading to be presented as a silver bullet. The last one is the task force does not take a view on double counting. While it recognizes it, it falls short in providing clear recommendations to solve it, which is crucial in order to ensure that offset claims are not counted once for the company and then a second time by the country which is organizing the project. And that was it from me. Thanks a lot. I can stop sharing my screen.
Fantastic. Thank you. Thank you so much. Thank you so much, Eftimiya. And that was a really informative presentation. Now we feel we know everything about high quality carbon. So I will jump from asking you a question, and then I will open the floor to all other questions. So first of all, can you comment your standing, like for everyone to understand, within Finland? Would you say you're a market leader? Are you the leading provider of carbon credits? Just so that we kind of understand your scale. And then the second part of the project, of the question, are you selling to individual? Can an ordinary citizen offset their carbon footprint?
Yes, thanks. On the first question, we were launched just under 2 years ago, and we are like on the market like a small actor still. We have directed almost 2 million into carbon credits, like purchases, since we became operating. However, our approach is unique, and I have not seen any other actor globally which has so like robust approach to evaluating the impact of carbon credits in projects. So I think we're unique in that aspect. We want to be world's best in providing the highest quality credits. So
makes sense.
And second question is, yes, individuals can compensate. We have a subscription plans which are like monthly. So we have even an app which is currently only in Finland and in Estonia, but soon it will be available in Europe.
Cool. Thank you. Thank you so much. Well, thank you so much to all the panelists. We now open the floor for questions. We have 10 minutes to go over your submitted questions and questions from this chat and YouTube. So I'll go back to Didier. Didier, if you're with us, we have a question on Texas and the recent critique of alternative energy sources in Texas. And obviously, you probably heard the news that political parties are trying to blame alternative energy for failing to provide energy to Texans. So the question from the audience is that, can you weatherproof alternative energy sources such as wind and solar? And to what extent was it, green energy fault in what happened in Texas?
Yes, brief comment. Before that I would just make a remark on the Stuart King presentation, which is very nice, but I would like to compensate the information. The frequency of hurricanes and many natural catastrophes have not been increasing. Even the IPCPP mention it. What is increasing? Do you receive me? Can you hear me still? Yeah.
Yeah.
What is increasing is the fact that, for example, when I was born, I'm still young, right? When I was born, the world population was 3 billion. and we are approaching 8 billion. And we are adding 1 billion people every 15 years. And these billions of people are consuming more and more, are building everywhere and so on. So indeed, what is increasing is the cost and the level of destruction simply because we are building everywhere and there. So it's very important to distinguish, the very strong aspect of the invading of the ecosystem by human population, the associated costs, which are actually indeed skyrocketing, but there is a misconception with respect to the frequency of natural catastrophes. There is a slight increase in some cases, but the major aspect is this. Okay, to come back to your question. So I showed a slide of this event in 1855 or something like that, right? Which was even bigger in terms of snow and so on than the one that occurred 140 years later. Now, the collapse here is associated with the extreme capitalistic market forces driving the Texas energy system. I think actually Texas is one of the rare states in the US which is completely disconnected with the network in the US. So there is, I don't remember the name, there is a small city on the northeast of Texas that was also exposed to the same, stringent winter storm and so on, but went very well through it because it was still connected to the grid of the neighboring states. So somehow, so it's not. I mean, many have attacked Texas for and renewable resources and so on as the cause and so on. But actually, the fragility is, in my understanding, much so. I am the first one to criticize the over enthusiasm and the misplaced love with renewable, which are dirty, they are not clean, and so on and so forth. But they are very good qualities also. In this case, I think the culprit is not this renewable mainly, but it is a policy of saying Texas is, the energy of gas and oil. We are self-sufficient. And also it's a bit like California. They have dozens of competing energy providers that have promised very, very low real-time, price adjusted rates of subscriptions, which in good times is great. It's like the financial crisis of 2008. But when there is a systemic event which covers all the providers, there is no diversification, exactly like the crisis of 2008. So it's much more a market failure through externalities and utter competition, which show that indeed there's a limit of market forces for providing a welfare to the global population. So I would not put too much pointing the finger of renewables, right. Really looking at the organization of the grid, the competition market. You may remember on this aspect that California, with the free market and the competition, they were actually manipulating and shutting down producing plants in California in order to artificially increase the price of the market to make money. So we have to be very careful with the energy grid and with market forces, because of course there are excesses and you have to be very watchful. And many catastrophes come from this type of market manipulation.
Yeah. Thank you. Thank you so much. Yeah, that's a very, very comprehensive answer. I have a question that I would actually like to open to the floor and ask all of you, if you want to sort of to answer. It's quite a straightforward question, but we get it a lot, and of course we also get it here. A question from an ordinary person who would like to be responsible. How to calculate your carbon footprint, get advice on how to reduce it and where to offset. It is all too complicated for normal people. I quote. So what do you say to a normal person who just want to be a responsible citizen?
Maybe I can answer that.
Yeah.
So there are available calculators. We have also calculated Compensate on our website. So when you take it, it goes through all consumption, like energy use, like where do you live, in what building, and then food and beverages, and then transportation. And then it gives you the value, like how much each option emits carbon. So you can decrease, exactly where the target areas are if you want to reduce your impact.
Thank you. Yes, Didier?
If I may to complement this, my answer to this layman person would be, please don't be autistically monomaniac on carbon, look more holistically at all the pollutions. Carbon, CO2, is a molecule of life. Of course, excess is present. It's a molecule of life. It's the most important molecule together with O2 to make grow vegetable and so on. I remind you that when there was an exuberant jungles and enormous dinosaurs, the amount of CO2 was 3 times we have now, 2 times we have, 2.5 times we have now. What is disturbing is, of course, the big change that will disturb humanity on the planet. The planet is not at risk. What is at risk is humanity on the planet. What is important is pollution, chemicals, how you feed, the meat that actually is destroying the environment. So if you want to really be good and do something for the environment, you need to think in terms of a portfolio approach, not be please autistic on this CO2.
Thank you. No,
I think I would just add to the group, you know, demand better products and services from the things you use and the things you buy from companies and entities. And I think then coupling with that, you may be left with a residual carbon footprint and buy as many carbon credits as you can, right? So, yeah.
Yeah, I think my 2 cents on this. Bill Gates has recently put out his new book, which I think includes a few bits on it. We put a link to it on our social media stuff recently, and I think that is quite a good one and echoes a lot of what's been said, especially from Didier, which is, you know, view it as a bigger pie, and what we have as people is buying power and political power as well. So it's at the moment there is no clear solution. I think what Eftimiya is saying is good, and I think what their platform offers is fantastic. But also don't forget that the sort of voice and buying power is the key.
Right. Well, thank you. Thank you very much. I have a question which I think Stuart may be answering. The question is simple. Can individuals trade carbon credits right now?
Sorry, can individuals trade carbon?
And should they?
Should they or can they, I guess?
The question is can, and my question is should.
Yeah, can they easily? No, actually, I think it goes to, do people actively want to be financially included in the process? And I think Compensate has that very well thought out. You know, there's so many variables in estimating your own personal carbon footprint. There's still a lot of work to be done. And then in terms of trading carbon, I think it's sophisticated. It's an emerging asset class. I think institutions will come first, and then hopefully that filters into the mainstream. I think that's the reality as I see it. But yeah, I look forward to being able to trade carbon credits.
I can complement your answer. So, like in our perspective, we want to cut all the middlemen. So we make sure that all the money goes straight to the project and nobody makes like profit on that. We have seen like middlemen can take a cut, which can be like extremely huge. For example, a credit can trade for €3 and then be resold for like €20. So we have seen that as well. So just working straight with project developers and making sure that all money goes straight to the project. So cutting all middlemen is crucial.
Yeah, thank you. Well, and from obviously my point and my background, I will add that Vlinder is on a mission to democratize carbon trading, and we can very well foresee the future where individuals can trade carbon coins the same way they can do Bitcoin right now in a very convenient app. And unlike Bitcoin, that is consuming a lot of energy and emitting a lot of CO2, carbon coins actually create good in the world. So that's, I think, one of the points of Vlinder's mission as well. And
Irina, if I may, this is a great idea, but you know, as a professor of finance, I should rush to add that market trading works when there's transparency, full access to information, no asymmetry, and so on. Otherwise, financial market and trading are prone to manipulation to excesses, to deviation crisis and so on, mispricing, misinformation, misleading and so on. So there's always, I think that it's very likely that the carbon trading made by masses of individuals which are misinformed, subjected to crowd, herding effects and so on, will bias the signal and so on. So it has to, everything is in the design. The design has to be extremely well done. And this is the part that is actually failing most of the time. And you were mentioning Bitcoin. Bitcoin is a big success, but a big failure in terms of bringing social welfare to society.
Absolutely.
Just a word of caution on that.
I think that's obviously the idea and the main consideration to have something that's actually bringing good to society. But yeah, absolutely. That's why we can have a lot more discussions on actual pricing. And I know that both Compensate, Treeconomy, I think also Stuart and his work, everyone is thinking about it. What is the fair price for a carbon offset? Like, how can you quantify it? How can you ensure that most of it goes to the project developer? And how do you price this, right? So that's, I think, definitely a discussion for, well, a post-conference drinks, if we could have it in normal life. But as Stuart said, we may go back to normal and discuss it in person. Again. So the final question that I have for everyone, and I would like everyone to have a say on it, very innocent. Who should pay for decreasing carbon emissions? Here you go. Who is paying for our transition to net zero?
Maybe I can go first. It's a simple question with a simple answer. So it's paying the one who is emitting. So if I'm individual, I compensate for my own emissions, like if I travel by plane. But if I'm a company, then I'll compensate for the emissions, like in my company, and then encourage my supply chain as well. So it's the emitter pays principle.
Thank you.
So I will, if you allow me, I will complement in the following way. It seems to be a simple question. It's much more complicated. 15% of the population of the world are developed. 85% of the population of the world needs to double, triple, quadruple its energy consumption. And they are all trying to get, to the kind of European level and so on. If they do that, we will need 5, 10 planets, right? And we will emit much more CO2. So these poor people, these people who are not, at the welfare level that we are, what do you tell them? They have to pay CO2 just to be able to be warm and get the necessary minimum of their life. So, what I see, there's a super strong bias of the 15% of the 15% of the population. And the solution that you, for example, Eftimiya, that you propose, I like what you're doing, is great. But you see, the danger is to generalized solutions which are for the developed world to the 85% of non-developed world. You cannot have the same solution. So it's extremely important to find other solutions, because they are going, for example, India and China are still building CO2 plants, coal plants. Coal plants, and the level of construction of coal plants is bigger than the total amount of coal plants installed in Europe and US together. So we can, manipulate with your little company, whatever you want. You can do whatever you want. It's negligible in the big schemes of things. So we need to think globally. It's a global problem, and we need to have scalable problem for the 85% of the population. Just a remark to set, the scale of the challenge that we have to face.
And I think, just to continue that thought, it's the people most vulnerable that suffer. I mean, we're talking about small islands that are losing their islands for raising sea levels. We're talking about, as Didier mentioned, developing nations. They have a right to be where Europe was 200 years ago in an industrial revolution type. We the city of London you couldn't survive in back in those days, burning peat and really dirty fuels. So I think there's a conflict, a natural geopolitical conflict when we move into the transition to the low carbon economy. And I think when we talk about decentralized finance, that really seems to me to make a lot of sense, that we begin to spread some of this wealth. But what COVID has shown us is actually the wealth gap has increased. I mean, there's so many fundamental things to address. I think it's, who pays are the most vulnerable in society, I think.
Yeah, from my side, I think it links, my answer links into what's broadly been said, but I think it is a polluter pays principle, and I think the largest polluters do tend to come from the more developed world at the moment, and I think it should come from that corporate level as well. So I think it should be poured through. If you look at the value chain, who has the capital, who has the money to pay for this at the moment, it sits a lot at that corporate level. And it shouldn't be coming from the slightly poorer individual level. I think that's one of the key fundamentals that's not assessed, and that's why we're largely targeting that B2B proposition, and that's our focus.
You forget that the consumers pay if the corporates pay even more, and the largest polluters are China, India, and Africa nowadays. So they are the growing. So, so sorry, China is polluting more than US and Europe altogether.
Yeah,
indeed, and it should be the companies in those places that are paying, Didier.
yes, I agree with Harry
and
about
the consumer will pay as a consequence. You forget that the companies, if they pay, it means that the price will be transferred to the consumers.
It might be transferred to consumers, or it can come out of the profit pool as well, Didier.
Yeah, and actually consumers in developing countries has very low emissions in comparison like to developed countries. So like people like in Africa have their footprint is like less than 1 ton of CO2, for example. And like in countries like China and India and Africa, like where most emissions come, for example, burning coal, it's actually where the most is the most profitable to have like renewable energy. So that could be the solution in these big polluting countries.
Yeah. Well, I think that's a, as I said, innocent question, which will lead to great debate. So unfortunately, we are out of time. And again, in a normal circumstance, we would continue that during lunch or dinner. But for now, I have to close this, and everyone is welcome. Everyone who's listening here or on YouTube, you're very welcome to come back to us with questions, so get in touch with us and continue this. And please also, both speakers, if you want to get in touch with each other and continue this conversation online, please feel free to do so. So again, thank you so much to traveling to Perm virtually today, and thank you for your contributions. I think it was truly interesting and really thought-provoking discussion today.
Thank you very much to all the participants and all the speakers. And actually, we have a chance to continue discussion with a glass of wine. Later tonight, it's going to be a virtual risk party, which is at 10 p.m. Perm time, which is 6 p.m. Central European time. So you're all welcome there. Join us with a glass of wine.
Thank you. Thank you all. Bye.
Bye.
Bye. Thank you for coming. Really, really cool.
Yeah.
Cool. Thank you, Eftimiya. Bye, Didier. Thank you. Thank you for your time.